Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And today I want to talk to you about inflation, both inflation in the economy and also inflation in stock prices, because I think the two are related. Let's talk about inflation in the economy first. I think that it's very likely that with all the government stimulus going on and with the ultra low interest rates we have in today's economy, that we are going to see higher inflation down the road. One of the things that's driving the stock market right now is cheap money and free money, cheap money from the Fed and free money from the government. And of course, the Biden administration is looking for a stimulus on top of the stimulus we just got in December. Now, how is this affecting share prices? Well, partly because people aren't able to go out and dine and spend and travel like they like. A lot of the money is coming into the stock market. We can see that because of all the new accounts being opened, not just at Schwab and E-Trade, but places like Robinhood with their trading apps. A lot of new investors getting into the market. And it's getting a little bit frothy because if you look at the amount of margin interest, which is a sign of excess because people are betting with leverage, or you look at the amount of option trading that's going on, which has historically been a sign of market euphoria. These are all signs of a little bit of market froth. And so, should you get out of stocks? Well, absolutely not. There are some stocks that I think are insanely expensive. In fact, I would say that GameStop in particular has been the biggest bubble stock I've seen since the dot-com era. Just a company that's been struggling and closing stores and seeing its stock go many fold in the last few weeks. So what did you do? Well, you should be prepared for inflation to come back. You might even own some inflation protected securities issued by the Treasury, but stocks are a great inflation hedge. So diversify outside the stock market, which is called asset allocation. Diversify within the stock market, which is spreading your bets among a number of different companies, and realize that the Federal Reserve has said that they're willing to let inflation run above the target level of 2% and for some time in order to get the economy humming again. So I think the outlook is positive for economic growth, but I think we're also going to see higher inflation, and that's been reflected in some share prices that really just can't be justified on the basis of sales and earnings and dividend yields. So it's a time for caution, and I'm going to be talking more about that in my Liberty Through Wealth columns here. And in fact, I have a special project with longtime subscriber and best-selling author Bill O'Reilly coming up in early February. So stay tuned to this channel, the Oxford Club channel, and stay tuned to the Liberty Through Wealth columns, which you can sign up for right here. It's absolutely free. And you'll be hearing all about not just what's happening in the markets, but what's happening with this special project with Bill O'Reilly. So I look forward to speaking to you soon. Thanks for tuning in.